Everyone. My name is Kate, and I am a financial technology advisor here at Hyperbots. Today, I'm thrilled to have Kelly O'Neill with me. Hey, Kelly, how are you doing today?
Doing wonderful.
That's great to hear. So, a little bit about Kelly. She's the Chief Executive Officer at KMONE Ventures. Today, we will be discussing about Colorado sales and use tax compliance. So, let's jump right in. So, coming to the first question, could you provide an overview of Colorado state sales and use tax rates? How do these rates differ across goods and services?
Absolutely. So Colorado has a base state sales tax rate of 2.9%, which is one of the lower state rates. But local jurisdictions, cities, counties, and special districts can impose additional rates if they would choose to. This can lead to significantly varied combined rates across the state. For example, general merchandise would be 2.9% state rate plus additional rate, and those would be based on the local taxation, resulting in a combined rate that can exceed 11% in some of the areas. For food and groceries, that's generally exempt from sales tax, though some local jurisdictions may impose a tax on those items. And then some of those items would be prescription drugs, medical devices. Those are exempt. And then in Colorado's decentralized tax system, it requires businesses to apply the correct combined rate for each sales location based on both state and the local rules.
Understood. Moving on, could you discuss some of the jurisdictions in Colorado with notably high or low sales tax rates? How does this affect businesses?
Yes, Colorado's local jurisdictions create a patchwork of different rates. Highest rates would be like some cities, such as Winter Park or Glenwood Springs, have combined rates exceeding the 11%. And lower rates would be unincorporated areas and towns that may have rates closer to the 2.9% rate without any additional local tax. This variability affects businesses by requiring them to apply different rates based on where each sale occurs. And companies in high tax areas may face customer resistance to higher prices, while businesses in lower tax regions might have an advantage with more competitive pricing.
So, how often do Colorado sales tax rates change? How do businesses keep up with these updates?
Colorado's state rate is pretty stable, but local rates can change frequently and often yearly or even more frequently if cities pass new tax measures. And some localities also implement seasonal rates in tourist heavy areas, like where we have skiing and things like that. Businesses typically monitor rate changes through the Colorado Department of Revenue, which then provides updated rate tables, or they use a third party tax compliance tool to stay current. And for companies operating across multiple jurisdictions, automated solutions are crucial to ensure they are using the latest rates accurately.
So, moving on, what are some of the primary resources available to businesses to stay informed about sales and use tax changes in Colorado?
Some helpful resources include the Colorado Department of Revenue. This is the primary source for state and local taxes and the guidelines and forms that are needed to be used. Sales tax rate lookup tools would also be part of what the CDOR offers. And those are online tools that allow businesses to look up rates by address or zip code. And then there's also third-party compliance software, tools like Avalara or TaxJar, and those provide real-time updates and comprehensive rate information across all Colorado jurisdictions, making it easier for businesses to apply the correct rate. And these resources are really essential for businesses to keep up with the varied tax structure in Colorado to ensure compliance.
I agree with you. So, what challenges do companies face when managing compliance with Colorado's sales and use tax rules? Could you maybe share some examples?
Absolutely. The main challenges would include jurisdictional complexity. And Colorado has home rule cities which administer their taxes independently. For example, a company with sales in Denver, which has its own tax administration, must also manage a different process than in-state administered areas. Additionally, would be frequent rate changes So if a local jurisdiction has to adjust their rates, those are often tied to tourism and seasonal needs, as mentioned, like in our mountain towns. Determining taxable items would be another area. And some items like groceries may be exempt at the state level, but then taxable at the local level, requiring detailed knowledge of each jurisdiction's rules. And these challenges mean that businesses must remain vigilant to apply the correct rates and taxability, especially if they operate statewide.
That makes a lot of sense. Moving on, how can artificial intelligence help businesses manage sales and use tax compliance more efficiently, especially with Colorado's complex local tax structure?
AI can simplify compliance in several ways. First way would be automated rate updates. So AI driven systems can pull tax rate changes from databases, ensuring that each jurisdiction's latest rate is applied. And then in local based rate application, AI tools can automatically determine the exact sales tax rate by customer location, ensuring accurate application across Colorado's home rule cities and state administered areas. There would also be benefit in monitoring and adjusting for exemptions. And AI can account for special exemptions like food items that are exempt at the state level but potentially taxable locally. Hyperbots AI, for instance, offers a solution that automates local rate adjustments across Colorado's jurisdictions. And Hyperbots technology applies the correct rates by city and county, reducing errors and administrative costs for compliance.
That was really insightful, Kelly. So, how can AI support companies during audits for sales and use tax compliance in Colorado?
AI really makes the audit preparation easier by managing and organizing documentation efficiently. For instance, instant document retrieval, AI systems can quickly retrieve the invoice, the sales record, and tax rate documentation by jurisdiction. And that would ease the audit process and make it simplified. And also in error detection and correction. AI can analyze transactions to identify any discrepancies or rate misapplications, allowing companies to correct issues proactively. And Hyperbots AI assistants can help businesses prepare for audits by generating compliance reports and organizing records by location. And this would be especially helpful in Colorado, where home rule cities mean that tax records must be highly organized by jurisdiction.
I totally agree with you. We have reached almost the end of our discussion today. So, coming to the last question, what do you see as the future role of AI in handling Colorado's sales and use tax compliance?
Well, AI will likely move beyond compliance here into areas that provide deeper insights, and those could be more predictive analysis. AI could forecast how tax rate changes across Colorado's home rule cities might impact revenue, allowing companies to plan for rate shifts. And in real time compliance monitoring, AI could offer live dashboards with tax liability insights across different Colorado jurisdictions. And then lastly, proactive compliance alerts. That would be where AI can notify companies of pending rate changes or legislative changes that have been updated, allowing them to adjust well in advance. Hyperbots AI is advancing in this area with solutions that provide real time compliance and predictive analytics. And their platform allows Colorado businesses to manage the complexity of local tax rules and anticipate those changes ahead of time.
I couldn't agree more with you. That's totally true. Thank you so much, Kelly, for sharing your insights. It was a really fruitful discussion, and a big thanks to our listeners for tuning in. Once again, a big thanks to Kelly.